Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at the technical terms used in money control. So, first, let's look at VWAP, which is volume weighted average price. So this is an important tool that traders use to gauge whether a stock was bought or sold at a good price. Typically, traders and analysts use the standard VWAP, which calculates the price based on all of the orders for the trading day. However, some prefer to use multiple time frames for the volume weighted average price. Traders and analysts use the VWAP to eliminate the noise that occurs throughout the day so they can gauge what price buyers or sellers are really trading at on the stock or the market. VWAP gives traders insight into how a stock trades for that day and determines for some a good price at which to buy or sell. There is a natural selling pressure when a stock trying to break above or below the volume weighted average price. When a stock or the market tries to break above or below this line or at the volume weighted average price cross, there's usually a battle between the buyers and the sellers. If a stock tries to break above or below the VWAP level multiple times throughout the day, traders and analysts can see that it is a good price to either buy or sell. However, some short term traders like to wait for one side to lose the battle and either go long on a break above the VWAP or short on a break below this line. The volume weighted average price can also help traders and analysts gain insight into where the momentum is at a specific time frame. For example, assume a trader was short on a stock because there was a constant selling pressure and the stock failed to break above the VWAP multiple times. If the stock reverses and has a clean breakout above the volume weighted average price, the trader should look to cover his or her short because he or she may be on the wrong side of the trade. The momentum has shifted to the buy side because the sellers have left up. Next, let's look at the lower and the upper price band. So, what are the price bands and the breakers? NSE and BSE have set price bands for all securities. The price bands serve as boundaries for the stocks trading. The exchange will not accept orders that are set outside the minimum and maximum of the price range. The purpose behind price bands and circuit breakers is to control mass buying or selling of shares and send a market spiraling into one direction, and perhaps most importantly, to curb panic selling. Most stock on the NSE and the BSE have an upper and lower price band. If a stock has derivative products listed or if the stock is included on an index on which derivative products are available, it does not have an upper or lower price band. It can have price bands of 20% either way based on the previous day's closing price, or a stock can have price bands at 10% either way based on the previous day's closing price. A stock can have price bands at 5% or 2% based on the previous day's closing price. Similarly, a market wide price band is implemented throughout the circuit breaker system. On the BSE, the Sensex is used, while on the NSE, the Nifty 50 is used. Whenever either triggers a circuit breaker, a coordinated trading halt is applied to all equity and derivative markets nationwide. The system is applied at three stages of the index movement: 10%, 15%, and 20%. Their scenarios can therefore come about. If a 10% movement occurs on either index, 1 hour market halt occurs if the movement takes place before 1 p.m. If the movement occurs or at or after 1 p.m. and before 2 p.m., the trading is halted for 30 minutes. If the movement occurs at or before 2:30, no trading halt is imposed. If a 15% movement occurs on either index, a 2 hour market halt occurs if the movement takes place before 1 p.m. If the movement occurs at or after 1 p.m. and before 2 p.m., trading is halted for 1 hour. If the movement occurs at or after 2 p.m., trading is halted for the remaining of the day. If a 20% movement occurs on either index, trading is halted for the remainder of the day. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.